Good morning, students. Morning, namaskar, suprabhat, sasyakal, vanakkam, kem cho, etc. So I believe you must be studying very hard to achieve the goal of your life as soon as possible to become a chartered accountant. So we were discussing the provision of income from house property. In the last session, we have gone through with the theoretical provision of income from house property. That charging section says that there are certain kind of income which is going to be included under income from house property. We have gone through with the definition of deemed owner also, in which we have seen that there are certain cases in which even if there is no registry in your name, still you will be treated as deemed owner and you have to pay the tax on any rental income which accrues or arises to you, even without you are not a registered owner. We have seen the provision for composite rent. We have discussed the provision for construction period interest, pre-construction period interest, current year interest, etc. So I believe you must have revised all the provisions. So today we will be completing our income from house property session. We will complete the provision as well as we will solve some illustration, test your knowledge question, and of course, a question from past year examination. So once again, I welcome you all in our today's class, and I have also given a example for calculation of current year interest and PPI interest for you, and I believe you must try that. So before starting the class, I want to ask some provision, like a recap from our last session regarding income from house property. So who will explain the basic condition for the chargeability of income from house property as per section 22? The charging section of income from house property. So who is going to tell me the basic chargeability section of section 22 in short? Matlab, what are the conditions need to be fulfilled to include any income under the head income from house property? So Dhanlakshmi and Shalini has raised their hands. So Dhanlakshmi, you will proceed, and Shalini, I will ask you deemed owner 2 or 3 cases from you. So Dhanlakshmi will explain us charging section 22 provision. So please proceed. Dhanlakshmi, please proceed. You are not audible. So maybe some issue at Dhanlakshmi part. So Shalini, you can explain section 22. Proceed.
Good morning, sir.
Good morning. Good morning.
Charging section 22. There should be a building and there should be a owner or deemed owner relationship. And third is building should not use for own purpose, own business like profession. And fourth is it is not building should not used for primary or main ordinary activity. And
Okay.
fifth is if held as stock in trade, then there if I'm working for 2 years, they are exempt. After 2 years, they should be deemed let out, then charge tax.
Okay. Good. Good. Very good, Shalini. Anyone else who wants to explain deemed owner 2 or 3 cases? Under section 27, we have discussed deemed owner cases. So is there anyone who wants to explain deemed owner 2 or 3 cases? Good to see that a lot of hands has been raised by Harsh, Prerna, Dhanlakshmi, Nagaraja, Pooja. Very good. So Harsh, you start. Okay, tell me only one case. Any one case, Harsh, of deemed owner. I will ask one case from all of you.
Good morning, sir.
Good morning.
Sir, if an individual transfer his house property to her spouse, like his or her spouse, without consideration, except they live apart.
Without educate consideration. देखो ना ये बड़ा important word है that consideration should be educate. And of course,
Okay.
the second condition, without an agreement to live apart. Okay, good. Prerna, can you explain another point from that deemed owner provision?
Yes, sir. Good morning, sir. Transfer made to the minor child without adequate consideration, and the exception is if the minor daughter is got married, then the transferor is not deemed to be the deemed owner.
Correct. Well done. So, Mr. Nagaraja, can you explain one more provision under section 27 we have gone through? Mr. Nagaraja, you there? Okay. Pooja, will you explain any other provision of under section 27 deemed owner?
Good morning, sir.
Good morning.
Person in possession of property. If a person is to escape from tax, or if a person is transferring the property without any registration, then he will be treated as a deemed owner. So he will be liable to pay the tax.
Correct, correct. If the transfer has been made without registry, so if the possession and the consideration has been done, but there is no registry has been made, still it will be treated as a transfer, and the person who is having the possession is going to be treated as deemed owner. Okay, Mr. Kuldeep, can you explain that society case, what we have discussed in section 27? Mr. Kuldeep, I don't think so is there. There's some background sound technical team, Mr. Vinu. There's a background sound is coming. So is it at your part? Yes. Now I guess it's okay. So let's begin with today's thought for the day. Today is my last session, and from the other head of income like PGBP, some other faculty will come and teach you the provision. So please revise all the provision from basic concept till income from house property. For my reputation, because there may be some question regarding the basic concept, residential status, salary, or house property. That is actually interconnected provisions under income tax. So please revise all these topics. So that's why other faculty is going to ask you some question regarding the old provision. So you should know about it. So revision is a ongoing process. You cannot do that you revise once and you will leave that topic for 1 month. 1 month. You should not do that. You have to regularly revise all the topics, whether you are giving 30 minutes in a day or 1 hour, it would be fine. Okay, technical team. Shalini, what you want to ask? You want to say something, Shalini?
सर चैट डिसेबल है.
अच्छा, chat disable है. Technical team, chat is disabled. Please enable it. अच्छा, वही मैं कह रहा कि आज किसी बच्चे का गुड मॉर्निंग क्यों नहीं आया. Done. Students, it's done. Now chat is enabled. You can send your queries, etc. So today we are going to complete our last session. So there would be a new faculty for the next session from the next session, and maybe I will come back again for some other topics. So you have to revise all the provision. Okay. So let's moving on with the thought for the day, and because it's the my last session, so it's a very interesting thought I have found for all of you, and you can correlate with that thought. We always say that one day I will become this, one day I will be rich, one day I will buy a car, one day I will do that. So there's only always a dream one day for all of us. But for that one day, what you have dreamed for, start working hard from day one. So there would be hard working from day one, day two, day three, and on and on. So when you will complete your working hard, sincerity, discipline, planning from day one till day two, three, four, five, 600, etc., then definitely there would be a one day which you have dreamed of. So that one day is for to become a chartered accountant, to complete your dream. But for that one day, what you want in your life, to look at yourself as a successful person, you should start working hard from day one, because there should be day one, day two, day three, day four, day five to be at that point of time when you will get your one day. So moving back, Mr. Kuldeep wants to say something. Adil is saying good morning. Linga saying good morning. Satish, good morning. Shamli, good morning.
Hello,
Yes,
sir.
Kuldeep. Hello.
Sir, good morning, sir. A person who is allotted building in a society in the previous year shall be deemed to be the owner of income earned from that property is treated as a under IHP.
Yes, we can say that. Okay, correct. Well done, Kuldeep. Fine. So good morning, Theosami. Good morning, Santosh. Dhanlakshmi is giving the answer that if the no loan repaid, okay, we will discuss that illustration. Do not worry, Dhanlakshmi. Navneet, good morning. Meenu is saying good morning. Tiwari Radheshyam. Tiwari Radheshyam is asking, sir, would you please explain the 2,30,000 provision? We have discussed that provision in the last session, Tiwari Radheshyam, but we will take that in a short way again because we were actually ending that point of time. So before the starting of the today's provision, I have given you an example for calculation of current year interest and PPI interest, and I believe you must have tried it. So here's the solution also. You can take the screenshot, etc. And I believe that was a very simple calculation. So you must have able to find out the interest portion. So the example was loan taken on 1st 4/20, 10 lakh 10% per annum. Completion of house is on 11th February 2026. So situation one was, suppose there is no loan repaid. If no loan repaid, then current year interest would be 1 lakh and 1/5 of PPI. So for that, we have to calculate the pre-construction period. So I have calculated the pre-construction period. Why current year interest is 1 lakh? Because loan was outstanding for full year. For full year, loan was outstanding. So the current year interest would be the complete interest. Now, for the purpose of PPI, we have to calculate the pre-construction period. And that needs to be start from some date and it needs to end also. Starting date would be always from the date loan taken. End date would be 31st March preceding the date of completion or loan repaid, whichever is earlier, because a case says there is no loan repaid yet. So we have to take the 31st March before the date of completion. As the date of completion has been given in the question is 11th February 2026. So before this date, the 31st March would have come on 31st March 2025. So from April 20 till 31st March 25, there are 5-year time period which should be regarded as pre-construction period. And for 5 years, the interest would be 5 lakh rupees. 1 lakh rupees each year, it would be 5 lakh. And 1/5 of that can be claimed as a deduction of PPI. So 1 lakh rupees current year interest, 1 lakh is PPI. It's a normal mathematics calculation, so we are not going very deep into the provision because it's easy to solve. Point B was, suppose if loan repaid on 1st August 2024. So if loan has been repaid on 1st August 2024, that means in current year, which is my 1st April 2025 till 31st March 26, there is no loan outstanding during this duration because loan already has been paid in the last year. So if there is no loan outstanding, there would not be any current year interest ever. But PPI could be there. So for the purpose of PPI, we have calculated the pre-construction period. Starting date would be same. End date was 31st March preceding the date of completion. That would be 31st March 25. But now loan repayment date we have, and that is 1st of August 2024. So it is earlier. This date is earlier than 31st March 25. So pre-construction period would be from 1st April 2020 till 1st of August 2024. That would be total 52 months, 4 years and 4 months. And if you will calculate the interest of this time duration, that would be 4,33,334, and 1/5 would be 1666667. That is going to be allowed as 1/5 of pre-construction period interest. Now, C case was if house property completed. House property completion date has been given 31st March 2026. And that means loan repayment not made. No loan repaid yet. So current year interest would be 1 lakh rupees. And the second point for which we have to calculate the pre-construction period, that would be again from 1st April 2020. And we need 31st March before this date of completion. So that would be 31st March 2025. That would be again 5-year. Interest would be 5 lakh, and 1/5 of it, that means 1 lakh also would be the 1/5 of pre-construction period interest in third case. So if you have already tried it, I believe now you should understood the concept of calculation of current year interest and pre-construction period interest. Mr. J is saying if loan taken date is not given in the question, what we do? It's not possible to solve if there is no loan taken date, if there is no loan amount has been given, if there is no rate of interest has been given, then how we can calculate? We cannot calculate. So there would be loan taken date would be there. Okay. So moving to the provisions now. We were discussing the concept of calculation for self-occupied property. And there is a concept of maximum allowability of deduction would be 30,000 or 2 lakh in different scenario. This 30,000 or 2 lakh is the aggregate of current year interest and 1/5 of pre-construction period interest. अगर कुछ confusion है तो I can explain this in Hindi also if anyone has any confusion in this. But the concept is saying there would be allowability of interest up to rupees 30,000 or 2 lakh rupees, depending upon the situation. So case A and B was when you have vacant house property or self-occupied property. So either both could be self-occupied, either both could be vacant, or one could be self-occupied, one could be vacant. So clarification is very important. Deduction in respect of self-occupied or unoccupied property where annual value is nil. So if that is under default tax regime, there would not be any deduction for even current year interest or PPI interest. So if there is a default tax regime question, and if the property is self-occupied or vacant, then up to 2 self-occupied or vacant property, your answer would be directly nil. You can ignore the information which has been given for loan amount, rate of interest, etc. They have no use. Only under optional tax regime, that 30,000 or 2 lakh rupees provision applicable as follows. So they are the condition. I guess Radheshyam Tiwari was asking. So when the property is acquired or constructed with capital borrowed, so if the loan has been taken, there were two conditions need to be satisfied. If loan has been taken from 1st April 2099, 1999, not 2099, it's 1999. So if loan taken on or after 1st April 1999 plus the construction has been completed within 5 years from the end of the financial year in which loan has taken. So if these both conditions fulfill, Then in case of both of these two house property, whether two self-occupied, two vacant, etc., the aggregate of interest 2 lakh rupees allowed for both two house properties. Maximum. The maximum interest allowed is 2 lakh rupees. Suppose actual interest is only 1,80,000. 90,000 for one property, 90,000 for second property. So total deduction would be 1,80,000. A very interesting provision where the loan has been taken for repair or renovation even after 1/4/1999. The maximum deduction could be 30,000. So if these both conditions fulfill, the deduction would be 2 lakh. If both condition does not fulfill, the maximum deduction is 30,000 for construction or purchase of the property. But if the loan has been taken for repair, renovation, reconstruction, then deduction would be only 30,000, whether it is after 1/4/99, whether it's before 1/4/99. So you should understand it in this manner. That in case of optional tax regime for maximum two house properties, if it is for construction or purchase, the deduction would be either 2 lakh rupees or 30,000, depending upon fulfilling of two conditions. But if it is for repairs, etc., then it would be maximum 30,000 irrespective of any condition. You cannot claim more than 30,000 if the property is self-occupied or vacant. Understand? So please check in the question the purpose for which loan has been taken. The condition has been mentioned over here. Holder of impartial estate is also fall under deemed owner. Yes, Kuldeep, it is also fall under deemed owner definition. Navneet Morre asking, no loan repaid means, that means full amount of loan is outstanding. You have not repaid any amount of principal amount. Okay. So we are done with A, B cases which are similar. Yes, we have done that. Mr. Nagaraja, deduction 15 BAC nil. So any other limit? No limit. If it is self-occupied property, if it is vacant property, then for maximum two properties, there would not be any deduction under default tax regime. Sir, the aggregate part is a bit confusing. Can you explain it? The aggregate means for both those properties, the maximum deduction would be 2 lakh or 30,000. Suppose you have two self-occupied property. The interest deduction you have calculated for property number 1. Suppose it's 1 lakh rupees. And for property 2, it's 1,20,000 rupees. The interest deduction for loan. So total interest is 2,20,000. But we cannot allowed more than 2 lakh rupees. So 1 lakh would be allowed from this and 1 lakh would be allowed from this. So you can only claim 2 lakh rupees maximum deduction under case A and B for both properties. Understood now? Navneet, how PPI calculated when no loan repaid? Navneet, what is the connection of no loan repayment and PPI? How does it interconnect? Maybe you have not revised the provision, what we have discussed in the last class. So PPI connection is with the construction of the property. So if even loan repaid or not, it does not affect the calculation. So how we calculate pre-construction period? Okay, tell me how we calculate pre-construction period. We take the date of loan taken and the second date is loan repayment date or 31st March preceding the completion. So if you will calculate, you will get 31st March before completion. And I have told in the last class also that if the loan has not been repaid, then we will take that 31st March date for the calculation of PPI. Maybe you are not understanding the pre-construction period interest concept, what we have discussed in the last class. Golti is saying, sir, lot many permutations like when the property is let out. Yes, there is this permutation combination, three kinds of solution. Solution one is consisting A and B case. That was vacant and self-occupied. Mustafa is saying if no loan repaid, we have to last preceding year 31st March. Exactly, correct. Confusion, Harivansh. I have confusion between section 115 BAC and section 115 BAC 1A. So 1A says you are opting out from section 115 BAC. So from opting out or for non-applicability of default tax regime, you have to opt out. And for opting out, the section is 115 BAC 1A. So whenever there has been written that you have opt out from section 115 BAC under section 115 BAC 1A, that means you are under normal tax regime. That means optional tax regime. Sir, construction completed but outstanding loan 2 lakhs. So reduction available under optional regime. Yes, if the property is self-occupied or vacant, you can claim the reduction up to rupees 2 lakh only under optional tax regime. So you can see that diagram also. Deduction allowed from NAV. This is for section 115 BAC. If the property is let out or deemed let out, then you can claim deduction under section 24A, that is 30% of NAV, and 24B, that is for interest on capital borrow, if the property is let out. But if under default tax regime the property is self-occupied, then no interest deduction under section 24. In the same way, if you will see in case of optional tax regime, if the property is deemed let out, you will get that 30% deduction and interest also. There is no limit on interest if the property is let out. The limit of 2 lakh or 30,000 is only applicable if your property is self-occupied or vacant. And that would be interest on capital borrowed. If loan is taken for, as we have discussed, for repair, renewal, etc., the maximum reduction would be only 30,000 rupees for both the properties. Only 30,000. There would not be 2 lakh applicability if the loan has been taken for repairs, renewal, etc. But if the loan has been taken for acquisition or construction of house property, then if the condition has been satisfied that you have taken the loan on or after 1st April 1999 and the construction has been completed within 5 years, then deduction would be 30,000. If this condition has not been fulfilled, if fulfilled, then you can claim deduction of 2 lakh rupees. So this is just the repetition of what the provision we have already discussed. Again, there are clarification. Those says that the limit of 30,000 or 2 lakh is only in case of self-occupied or vacant property. But if your property is let out or deemed let out property, then there is no such restriction. You can claim interest as much as want. Whether it's 3 lakh, 4 lakh, 5 lakh, 6 lakh, 7 lakh, 10 lakh. No restriction if the property is let out or deemed let out. The ceiling limit prescribed for self-occupied and interest on loan borrowed does not apply to a let out or deemed let out property irrespective of the regime. Whether under your default tax regime or optional tax regime. If the property is let out or it is deemed let out, then as much as you want, you can claim the interest deduction. Ms. Monisha is saying, sir, though the assessee has not paid any interest till date, will he avail PPI? Is it based on accrual? Yes, it is on accrual basis. So interest deduction you can claim on accrual basis. There is no requirement that the interest should have been paid. You can see the second point what we were about to discuss is exactly for this purpose. Deduction section 2B for interest is available on accrual basis. Therefore, interest accrued but not paid during the year can also claimed as deduction. Next is in case of let out property, deemed let out property, interest accrued is allowed as deduction without any ceiling limit. We have discussed that. Unpaid purchase price, kindly read this provision. It's a kind of loan again. Interest paid on unpaid interest is also not deductible. That's a kind of a penalty, so it would not going to have deduction. So we have gone through with case number A and B. Now there is case number C. So we will skip that case because C case is not any solution case. It's a selection based case. And when we will complete our all cases, then you will automatically understand what exactly case number C says. In short, let me tell you, when you have multiple houses, suppose you have Mr. A is having 4, 5. Suppose Mr. A is having 6 houses. Fine. This is self-occupied. This is self-occupied. This is vacant. This is let out for residential purpose. This is let out for commercial purpose. This is let out and some part of the year it is vacant also. So when you have multiple houses, then C is just the selection case. C is just going to tell you which house or which case need to be solved. How? That's it. C does not have any solution. C is just selection. What C will tell you? That out of these 3 houses, you need to solve 2 houses as self-occupied or vacant. So that is going to be solved as per case or B. One house, any one of your choice, one house need to be taxed as deemed let out. Out of these 3, 2 would be solved as per case A or B and one needs to be solved as per deemed let out. And deemed let out case is case number D. They fall under case number D, what we will going to discuss. Again, let out, they are also going to be the part of case number D. So if your property has been let out, only let out for full year, then that's also going to be solved as per case number D, if there is no other condition. If the property let out as well as vacant, then this is going to be solved as per case number F. So C does not have any solution process. It is just a selection process. It just say, okay, this house needs to be solved like that. That house need to be solved like that. So if you are having multiple cases, multiple houses, then which house going to be solved according to which condition, that is going to be explained by case number C. So technically, C case has been end. So you must have seen till now that there is nothing to solve. We have discussed case A, B, and technically C. So C is not exactly a solution case. A and B is having only one condition, that maximum 2 houses, annual value will take nil. If it is section 115 BAC, then no deduction for interest also. So the answer would be nil. As simple as that. If this is optional tax regime, if you are opted out of section 115 BAC 1A, that means you have under optional tax regime. In that case, you can claim only interest deduction for both houses in aggregate. And that would be either 30,000 or it could be 2 lakh rupees, as the case may be. So C was not a case. So technically there is no asset solution till now. If you know how to calculate interest current year in PPI, then there is no other calculation in case number A or B or C. So C is though not a technically a case. Now from case number D, you will see the calculation which needs to be done under income from house profit. So now we are discussing case number D. Now, first of all, we should understand what kind of property, what kind of cases needs to be have treatment under case number D. So case D says if there is a property if there is a property and that has been let out for full 12 months, if that has been let out for full 12 months during previous year, full let out, पूरे साल, it was let out completely, and full 12 months rent also received. So there is no dispute regarding the rent also. Our tenant has paid all the rent without any issues. So we have received full 12 months rent and the property was let out for full 12 months. So these kind of cases is going to be solved under case number D. One more kind of case is going to be solved under case number D. So first cases are those houses has been let out for full 12 months and full 12-month rent received. That is going to be solved as per the provision of case number D. And all the cases, if they have been treated as deemed let out, all deemed let out case also need to be solved as per case number D. So technically, D will consider two kind of house property. If the house property is actually let out for 12 months and full rent has been received, those case needs to be solved as per case number D. And if that house has been treated as deemed let out, that is also going to be solved as per case number D. So first of all, you should understand the question which has been given in question. The situation which has been given in the question needs to solve as per which scenario, whether it's a part of my scenario A or B or whether it's a part of my scenario number D. What will happen if you're able to choose that? If you have choose that is a scenario which needs to be solved as per case number A and B. So you will not confused in the solution. You just need to focus what is the solution process in A and B. This is the main problem under house property questions, that if you are not able to find out which situation or scenario case has been given, then you may make a mistake. That's why I have divided these cases as per A, B, C, D, E, F and G. Once you have find out that, okay, this situation will fall in that particular case, I am telling you more than 50% work has been done. Because if you'll focus on that case, then you will just apply the provision of that case without any confusion of applying any other concept. Okay, so now we will see how to find out or how to solve those cases. Those will fall under case number D. Let me see if there's any query. Yes, exactly, Mr. Navneet. So can you tell me which illustration are like this you created ABC case? I can't find that in module. I will give you all the illustration, and in test your knowledge question also these illustrations are there. You will find out. I will let you know. Tiwari Radhesham is saying, sir, if construction is not completed within 5 years, so then deduction would remain maximum 30,000 if that property is self-occupied or vacant. But if it is that property is let out, then as much as interest you want, you can claim. No restriction on that. Golty is saying, sir, only trick to catch up the type of case scenario is to check the condition of all the cases independently. Yes, exactly. That's why. So you will able to understand and you would be actually able to apply the cases once you will go through with all the cases. Abhi, what is happening now? You must be thinking about a different scenario, which we have not covered in A, B, and C and D. So once you will complete our A, B, C, D, E, F, G, then you will have all the kind of scenario, all the kind of permutation combination, and you will decide the kind of scenario which has been given in the question needs to be solved like this. Because in my opinion, there are 2 or 3 kind of houses would be given in the examination. One would be let out, one would be self-occupied, one would be let out and vacant. So examiner will check either you know all kind of provision or not. So there would be at least 2 or 3 houses information in the examination. So that's why you have to understand which house needs to be solved according to which case scenario. So for the purpose of case D, first of all, now we will find out the GAV, the gross annual value. Gross annual value. So in the format, what we have discussed in the last class, there was the calculation of GAV. It was as been written, you must remember the format. There was a point that was saying GAV less municipal taxes paid by owner. Then we will have our annual value, then 30%, and then interest. So in case A or B, like self-occupied and vacant, we directly start from here. Annual value assume always nil. So we did not see what is exactly GAV. Now from case number D, we have to understand how to calculate gross annual value. So there are 3 steps. Step number 1, and it's very easy. Step 1 says municipal value of that property for the year, for 1 year. Municipal value of that property that would be given in the question. You have to take that value, municipal valuation or municipal value. And you need to compare this to fair rent. Fair rental value of that property for 1 year also would be in the question. So the fair rental would be there and municipal value would be there in the question. We do not need to calculate it. So out of these 2 values, step 1 says find out the higher value. And now step 2. Step 2 says compare a value which is called standard rent. There is an act which called Standard Rent Control Act 1860, I guess. So this is the value according to that Rent Control Act. So there would be a value of standard rent in the question. Now this higher value should compare with the standard rent value which has been given in the question. And now take the lower of it. This higher value and standard rent, the lower needs to be taken. And now the step number 3. This lower value needs to compare with actual rent received. Actual rent received, that is also would be there in the question. And out of these 2, the higher would be gross annual value. Now it's obvious that in case of deemed let out properties in which there is no actual rent would be there. For this, there would be actual rent received. But in case of deemed let out, this point would not be there. Step number 3, actual rent received would not be there in case of deemed let out property. In that case, the lower value automatically will become the gross annual value. So technically, you must have seen there is municipal value, fair rent. We have to take the higher of it. Short math we can understand. This higher needs to compare with standard rent. The lower will come out. This lower needs to compare with actual rent received. And the higher would be your GAV. This is the short format of the format we have discussed. One very important information, and please remember this very carefully. It's a very, very important information what I am going to say. If suppose in the question, municipal value is not given. It is not mandatory that all the fair market value, standard rent, municipal value should be there. Maybe one of them would not be there. So if municipal value is not there, then do not write 0. Just make dash. So suppose if municipal value is not there, you will write it down dash and fair rent. So automatically fair rent would be considered as higher. Suppose this higher is there, now standard rent is not given. Then consider it as a dash. So higher and dash, the lower would be again this higher value. If you write it down 0, then maybe as mistake you will take lower value as 0. So that's why I'm asking you to mark a dash. So if any value has not been given, then the other value needs to taken. If municipal value is not there, fair rent, that is automatically higher value. If standard rent is not given, then dash, then that higher value automatically will be my lower value. In the same way, in case of deemed let out, ARR would be always dash. There would not be any actual rent received. So automatically this lower value would be your GAV. So if municipal value, if standard rent, if actual rent received is not given in question, then kindly use dash in place of that. But there is a crux. You must have seen that I did not mark this for fair rent. If municipal value is not given, mark it down dash. If standard rent not given, dash. ARR not given, dash. But if fair rent is not given, then there is a crux. If fair rent is not given, please remember this note. This is very, very, very important. If there is a house property question, and suppose out of 10 questions, if you'll try to solve, you would be able to solve 8 without any problem, very easily. And if you are not able to solve those 2 questions, maybe due to this provision, what we are going to discuss, because maybe you are not applying this concept, maybe that's why your answer is not correct. So this is that important point. It's very simple, it's still very powerful. Because we have an habit that if value not given, make a dash. But you can do this in case of municipal value, standard rent and ARR, but you cannot do that in case of fair rent. If fair rent is not given in question, but actual rent is given. So if in any question, fair rent is not given, but actual rent is given, then we need to replace fair rent with expected rent value. Then we have to calculate a new thing in place of fair rent. Now we will calculate expected rent. Fair rent would be transformed into a new calculation, into a new amount, and that would be called ER, expected rent. And this expected rent need to be calculated as follows. This is the formula, actual rent into 12. That would be expected rent. Other provision will remain same. Then we follow municipal value or expected rent, whichever is higher. So this is very, very, very important. I can mark 3 or 4 star. So you can understand how important clarification this is. If municipal value, standard rent, ARR not given, then that would be replaced by dash. But if fair rent is not given, but actual rent is given, suppose fair rent is not given and actual rent also not given, then you can make a dash also. But if fair rent is not given, but actual rent is given in question, then he have to replace fair rent with a new value that is called expected rent, ER. And how do we need to calculate it? Actual rent into 12. That means full year rent. That we will call expected rent. So understand? Maybe you are feeling it's complicating, but let me tell you, when you will solve question, you will feel house property is not actually head of income. It's just easy to solve on calculator. So our format was municipal value or fair rent. It could be expected rent also in some cases, whichever is higher. So this higher and standard rent, whichever is lower. And this lower or actual rent received. The higher would be your GAV. Clear? Now, after calculation of GAV, we just need to follow the format. Now, everything has been done. It is municipal taxes paid by owner. You have to reduce that. So two things is important. It should have been paid. If municipal tax is due, outstanding, payable, you cannot claim the reduction. And it should have been paid by the owner. If the question says municipal taxes has been paid by the tenant, then again you cannot claim the benefit of it. You have to reduce the municipal taxes. Then 30% reduction of this value we have to reduce, as we have seen in the format, and interest. Both interest. The good news is, whether it's current year or 1/5 of PPI, there is no limit. There is no limit of 30,000 or 2 lakh rupees. So you do not need to check when loan has been taken, etc. Just calculate your current year and 1/5 of PPI. Whether it's 5 lakh aggregate, 6 lakh, 7 lakh, 8 lakh, you can claim full value as interest reduction. So this format is just how to calculate GAV. Once you find out the GAV, the other things are too simple to solve. Monisha is saying, what if the case of deemed let out, their actual, as I've told you, in case of deemed let out, there would not be any actual rent. And suppose if fair rent is not given, then claim a dash over here. So in case of deemed let out and fair rent not given, then you cannot calculate expected rent. So then you can replace it also against a dash, as I've discussed you. Only if actual rent is given, then only can you calculate expected rent, else you can utilize dash if fair rent is not given. So that is the case number D. Nagaraj is saying what? Sir, income tax department view behind this chain. Could you please explain what chain you want to know, Mr. Galti Anil? And as I have told you earlier multiple times, we cannot understand the logic behind the law because there are logic behind law, but it will take a lot of time and which is not relevant for the purpose of our examination. So this is called a smart study. What is relevant, you have to understand first. First of all, clear that group. And if you want these kind of information, so you have to Google it. Okay. Nagaraj is saying, sir, AR is lower than expected rent. No, how it's possible? AR into 12, that it's we have to take as a expected rent. The value which will come as a lower, higher will also depend upon what is your standard rent, etc. So do not make any assumption that if this will happen, this would be lower. If that would happen, that would be higher. You have to follow the step. You will get the correct answer. Vacancy we will discuss. Just wait. We are just discuss. Look, do not get confused. What we have discussed in the solution part till now in the house property, think about it. What is to get confused? Forget about your permutation combination. Case A or B, is it difficult? If case A and B in default tax regime, write it down, the answer nil. That's it, finish. If it is under optional tax regime, then you know how to calculate only interest. And calculation of interest is not an income tax provision. Calculation of interest is a normal mathematical calculation. Just you need to know what is pre-construction period. Limit would be 30 or 2 lakh rupees. A, B solved. C is not a case. What we have done in D, just 3 steps. And all value would be there in the question. We do not need to calculate municipal value fair rent. So municipal value fair rent higher taken, higher standard lower taken, lower ARR taken, higher GAV. After GAV, nothing left in the question. If FR not given, but AR given, then we have to take ER. And again, that would be on the basis of AR into 12. So logically, if you think, we did not discuss anything difficult till now. What is actually complicating the provision? Let me tell you. If any one of you is confusing, you are confusing for your assumption cases, which we have not discussed yet. A, B, C, D is nothing difficult, nothing at all. So just stop overthinking. What will happen if that happened? That we will discuss. So there is no as such difficulty till now in the solution of case number A, B, C, and D. So now we are moving on case number E. Just a second. White is बंद हो गया. Just a second, student. Whiteboard, I guess, बंद हो गया. Let me start it again. So, on the basis of whatever we have discussed till now, there is nothing complicated at all. Case number A, B, C, and D are simple. Moving on to our case D from the notes, you can see tax treatment for the let out property or deemed let out property. So you can see that whatever case we have discussed, that when the property is let out or property is deemed let out. This was the case, what we have gone through. So it is actual let out for 12 months and rent received for 12 months too. So this would be the case number D. And all deemed let out case would also fall in case number D. How to solve it? Step number 1, higher value, municipal fair rent, lower as per step 1 or second standard rent, or third is again higher as per step number 2 or actual rent received or receivable. Municipal value meaning, fair rent meaning, standard rent meaning has been explained over here. You can go through it. Now, case number E, what we are going to discuss is house property let out for 12 months, but unrealized rent there. Unrealized rent means bad debts. What we call bad debts in our business, that we have sale or we have provide any services or sale of any goods to any person on credit. And suppose we are not able to realize some part of the sale proceed or full part of the sale proceed. So he is my debtor. So if he is not going to pay, that would be my bad debt. So this is a kind of bad debt in case of rental income. So suppose I have let it out my property for full 12 months. So this is similar to case number D, but there is a one change. In case number D, there was full rent received. But in this case, the full rent not received. There would be 1 month unrealized rent, there could be 2 months, 3 months, 4 months, but there is some unrealized rent. So in simple language, you can understand this rent as bad debts. So what we do the treatment of bad debts under our PGBP, we claim it as an expenditure, bad debts write-off. In the same way, because we did not realize this rent. So logically, how we will solve this question? If the question says that case number E would be like this in the examination, that Mr. A let out a property to Mr. B for suppose 50,000 rupees per month. He occupied the property for full 12 months, but 2 months rent not paid. This information would be like this. Municipal value, suppose in question has been given, suppose 7 lakh rupees. Fair rent not given in question. Standard rent has been given in the question, suppose 5 lakh 50,000 rupees. Now you have been asked to calculate GAV. No other information. Yeah, one more information is there. 10% municipal taxes paid by owner. Clear? Current year interest has been given in question, suppose 4,50,000. Now you've been asked to solve this question. So we have to understand that this question does fall in case number E. Now what is the solution pattern of case number E? The solution pattern of case E is exactly equal to case number D. There is nothing new. So first step would be same. Municipal value and fair rent. And because fair rent is not given and actual rent has been given in the question, so we will calculate expected rent in place of fair rent. So that would be 6,50,000 into 12. That would be 6 lakh, whichever is higher. So this higher 7 lakh now needs to compare with standard rent, which would have been given in question, which has been given in question 5,50,000. So the lower I need to take. So 5,50,000 needs to compare with actual rent received. Now my question from all of you, what should be the actual rent received in this question? How much I should write it down over here? The meaning of actual rent received. What should be the meaning of actual rent received? In this example, how much rent has been received? Neeraj is saying 5 lakh, well done. Then Lakshmi is saying for 10 months, exactly same thing. Shalini is saying 5 lakh, well done. Ajay is saying 5 lakh. Disha is saying 5 lakh. Navneet is saying 5 lakh. Of course, it's 5 lakh. Urmila also said 5. Aishwarya 5. Thusami is saying 5 lakh. It's a normal thing. The word also explains itself. Actual rent receipt. And if 2 months rent is not received, you will automatically take in 10 months rent. So that would be 5 lakh. Correct, Mustafa? Correct, Santosh? Correct, Harsh? So which would have is higher is 550 would be higher, and that would be my GAB. So now municipal tax, and it has been given in percentage. So let me tell you, if that is on percentage, then always apply this percentage on the municipal value. That is a universal rule. If the municipal tax has been given in percentage, and you don't know on which value I should use this percentage, then it is universal. You have to apply this on the municipal value. That would be 70,000. Clear? So that would be 4,80,000. Now deduct 30% of it and reduce 4,50,000. Because no limit of interest in case of property let out or deemed let out, only interest restriction is upon case number A and B. C, D, E, F, G, no interest restriction. It is solved. So what we have done, nothing, just simple applicability of a step, and you will have your answer. And because this actual rent received word is very interesting, because it itself explains that only consider that amount which has been actually received. So in D case, if you remember, what is the D case? When we receive full 12-month rent, so automatically ARR will consider 12-month rent. In E case, because there must be some unrealized rent, so automatically we will consider those month rent which has been received by us. So this actual rent received word is very interesting, and because of this word, we are very much in ease to solve what is the meaning of ARR. It explains itself. Only consider that value which has been received as a rent. So technically we'll see D and E solution is exactly same. The difference is in case of D, actual rent received value will be for full 12 months. And in case of E, there would be less than 12 months always. And as I have told you in the last class, there is no requirement to write it down in the examination. This is case D solution, this is case E solution. There is nothing A, B, C, D, E in the act. This A, B, C, D, E just make to understand you that the situation which has been given in the question, the scenario which has been given in the question, you have to focus that it is an unrealized rent case. So I have to apply E provision. So you will not get confused for applying other provision like F or G. So once you have find it out in the scenario, which case it is applicable over here, you would be really very ease to apply the concept clearly for the purpose of solution of question. So understood what is case number E? Now, the next case should be case F, but we will complete case G first. F we will do at the end. So now case number G. And the good news, case D, E and G all having same solution pattern, no differences. Only one thing will change, that was actual rent received. In case number D, that would be for 12 months. In case E and G, that would be less than 12 months. What is the difference between then E and G? Under D, the property was let out. If I'll explain you the difference, D, E and G. The property was let out should have been for 12 months in case D and case E. And the actual rent received would be for 12 months. And in this case would be less than 12 months. Now what is case G? So understand the case in this way. If any house property is let out for part of the year, and self-occupied for remaining part of the year, that would be case number G. What I am trying to say, suppose there is a house which has been let out for 8 months and for 4 months it has been self-occupied. It could be 2 months, 10 months, it could be 11 months, 1 month, it could be 6 months, anytime. But the basic thing you have to check, it should not be vacant. Not vacant at all. So either tenant was there or the landlord was there. So either it was let out or it was self-occupied. Vacancy was not there. If vacancy would be there, there would be case F, which we will discuss at the end. So D case, E case and G case. Now you will see the difference. This is the similarity, this is the difference. Now G case, let out time would be less than 12 months because it is let out for some part of the year and self-occupied for remaining part of the year. So the let out time would be automatically less than 12 months and obvious the rent received also is less than 12 months. But the solution pattern of all D, E and G is same. What is the solution pattern? Exactly same. No difference. Municipal value we have to take for full year. Full year आएगा, ध्यान रखना. Full year. All in 3 cases, municipal value would be full year. Then fair rent, and again that the same thing, expected rent. Higher, standard rent, lower. And this lower needs to compared with actual rent received. Can you tell me how many months actual rent received would be over here on the basis of this example? How many months? 8 months. Mustafa is saying 12. Why Mustafa 12? Actual rent received would be for only 8 months. Because only the rent we will receive for that time duration, the property has been let out. So that would be 8 months. The higher would be your GA. Other points are copy paste, municipal taxes paid 30% and interest deduction. Understood? Suppose the question says that out of these 8 months, 1 month rent is unrealized also. 1 month rent is unrealized. So again, it will remain case G. But now rent of 8 months, in place of rent of 8 months, we will only take rent of 7 months. So nothing will change. Solution will not change. It would remain the same. So that's why technically D, E, G is same solution pattern. Automatically in D case, ARR would be 12 months. In E case, ARR would be less than 12 months, and also in G case, ARR would be less than 12 months. So I am just separating those cases so you will not confused. Now in the case, you just need to find it out. Which scenario is applicable? Full let out, full rent received, focus on D case, solved. Full let out, less than 12 months rent received due to bad debts, E case, solved. Less than 12 months let out and balance month self-occupied, and vice versa. So again, case number G, we have to take actual rent received in this case. That's it. Yes, Navneet, in G case also, there is no interest limit. The difference on D, E, and G is just up to ARR value. That's it. Everything else is exactly same. Okay. Now let me ask you a single question. This is not connected to case F. Case F yet to be discussed, but I am asking something else to you. Suppose there is a house, ground floor is self-occupied for 12 months, and first floor is let out 12 months. Rent received 11 months. Now, can you tell me how this house needs to be solved? On the basis of cases we have discussed. This is not the F case. I don't ask anything which I did not teach yet. So A, B, C, D, E or G, except F. You have to tell which case is going to be applicable, or how do we need to solve this question. Urmila is saying G. When there would be multiple cases, there would be C applicable. This is C. And what C will say? C will say solve this part as per case A or B. It's a self-occupied part. And solve this case as per case number E. This is not a single case. This is combination. Like we have multiple houses, so we could have different cases in a single houses also. In multiple cases in single house. So the part which has been self-occupied needs to be solved as per self-occupied provision, and the part which has been let out needs to be solved either at D, E or G. Yes, municipal value, fair rent, everything needs to be divided in equivalent part, 50-50%. That's the kind of question we will solve. So I was just trying to make you understand that when there is a scenario, this is how you need to find it out. So you know what? If you will find in this question that, okay, first floor I need to solve as per case number E, and ground floor I have to solve as per case number A. So you know what will happen? You would be clear how to solve the question. So now you understand, in case of ground floor A or B, I will apply 30,000 and 2 lakh rupees interest provision maximum. And in case of E, there is no such restriction and I have to find out GAB. So that's why I have divided these scenario in case A, B, C, D, E, F, G. Once you would be able to apply the correct case, once you would be able to understand which case needs to be applied, automatically your brain will tell you the clear picture that how do I need to solve this question. You will not confuse that, okay, now in this case 3 lakh would be applicable or 30,000 or 2 lakh rupees. No, you know this is case E, this is case A, sorted. Then you can apply the question or you apply the provision easily. Yes, Mr. Galtian, you are absolutely correct. Yes, in the case of G also, if there's unrealized rent, we will deduct it, not a problem. So now we have left with only case number F. And you will see when I will write it down the case F, this is the case we have not yet discussed. This is a different case scenario. And the solution pattern is also a little different. That's why we are discussing it after that. So now A and B, same solution. C does not have any solution. D, E, and G is having same solution pattern. F is exclusive. This is different. So case F says if the property is let out and vacant, some part, both. If property is let out for part of the year, as in case of G, property was let out for part of the year and part of the year self-occupied. So now the property is let out for part of the year and vacant for part of the year. Now a very interesting thing also. If these two conditions has been fulfilled, that means property was let out also and vacant also. So if these two conditions fulfill, then all other, you can say then F case will apply. Don't get confused. What does that mean? Suppose in let out part, there is some unrealized rent also. Still, case E will not apply. Case F will apply. If these two conditions fulfill, then it will override or supersede all other cases. For example, there was a property 7 month let out. Okay? 3 months vacant. And 2 months self-occupied. Now in case number G, we have seen that let out and self-occupied is the part of case G. But as soon as let out and vacant condition has been fulfilled, because let out and self-occupied also and let out vacant also, then case F will supersede it. This question now need to be solved as per case number F provision. So if let out plus vacant, unrealized rent, case F. If let out vacant and self-occupied also, case F. So if these two conditions fulfill, it will supersede all the provisions. So case F needs to be applicable. Now be very careful that how to solve vacancy and let out question. This is the last case. After this, almost 90% of house property provision has been done. Only small provision clarification we have to go through and then illustration, etc. So now you can see the solution process is step number 1 is same. As per case D, municipal value, fair rent, whichever is higher. Step 2, this higher needs to be compared with standard rent. And now whichever is lower. Step 2 is also same. Now step 3 is going to be changed only. Only step 3 is going to be changed. Now step 3 says the lower value, what we have received from there. Now this lower value needs to compare with some other value. And what is that value? This is very interesting. In case D, E and G, there is actual rent received. We call it ARR. Again, FRER concept would be there also, no problem. Okay, it is same. Expected rent is there. But in step number 3, in case of vacant property, we need to calculate not actual rent received. We have to take annual rent in place of actual rent received. So, as the name suggests, can you understand the difference between actual rent received and annual rent? What should be the technical? Actual rent received means the months of rent you have received. But the annual rent mean always 12-month rent you have to take. Let me give you example. Suppose municipal value has been given in question 3 lakh rupees. The fair rent has been given in question 2,80,000 rupees. The standard rent has been given in question, suppose 2,60,000 rupees. Actual rent was per month, suppose 25,000 rupees per month. And it says vacancy for 2 months. Vacancy was for 2 months. So in this case, suppose it is the case of D, E, and G, in which we will take only actual rent receipt. But in case of vacancy, we have to take full 12-month rent over here. And that would be 3 lakh rupees. So if you'll see from this value, agar practically we'll solve, then municipal value fair rent, whichever is higher would be 3 lakh. This 3 lakh needs to compare with standard rent, which is 260. So lower value would be 260. So we are technically comparing it with 2,60,000 rupees. So in case of step number 3, we always need to consider annual rent. And annual rent means always take the value of 12 month. But there is a crux. That's why it is important case. Out of this annual rent, you are not going to compare 3 lakh rupees till this compared to 260. Not yet. Abhi we have to do something else also. Whatever annual rent you will calculate, out of this annual rent, we have to reduce unrealized rent if given in question. If there is any unrealized rent has been given in question, then you have to apply or reduce that unrealized rent from this annual rental value. And if the property is self-occupied for some part, if that property is self-occupied for some part, then for that part, rent which has been included in this 12 months needs to be reduced. In our question, you will see, I am extending this question. Suppose there is 1 month unrealized rent and 1 month self-occupied property. Clear? So we will take annual rent for full 3 months, for 12 months, and we have to reduce unrealized rent if that has been given in the question. And if self-occupied also, then for that month rent also need to be reduced. So if we will do that, then out of 3 lakh rupees, 25,000 rupees 1 month rent and 25,000 one self-occupied rent. That needs to be reduced. So the remaining value would be 2,50,000. So after these two deductions, suppose if there is no unrealized rent, no self-occupied property, then we'll take this value outside. But if these values there, then we'll take this value outside for the purpose of comparison. And now the comparison needs to be done. Higher would be GAV. So in this case, you can see this value is higher. So standard rent, which was lower, which was fixed value, that's going to be called GAV. But things not end yet. Suppose if I'll change this question, so there is a GAV, and after GAV, the provision would be normal, municipal taxes paid by owner, exactly same provision, no change. But suppose in this example, suppose no self-occupied property, no self-occupied property for 1 month. Suppose in this example, only 1 month unrealized rent was there, but property was not self-occupied for 1 month. Now what would be the change? Now see the change. Now you understand the beauty of this provision. The step 3 value would come as lower value 260, same as above case. But now the calculation will change a little bit. We will take the annual rent, 12 months, again 3 lakh. And there is 1 month unrealized rent, that is 25,000. So now this value would be 2,75,000 because there is only unrealized rent, no self-occupied part is there. So now if you will compare it, then higher value would be this annual rental value, what we have actually calculated. This would be higher value. And if this is higher, the second value which we calculate on the basis of annual rent, if this is higher, then this would not be GAV. This would not be GAV. If these value higher, which is as per fixed standard rent value, if this is higher, this would be GAV. As in the above example you have seen, 2,60,000 was the GAV. But suppose if this value is higher, which is based on the annual rent calculation, then this value would not be regarded as GAV. Now in this value, we have to reduce one new thing. Vacancy rent. How month vacancy it was? 2-month vacancy. In the question, there was 2-month vacancy. So vacancy treatment can be done only if this annual rental value comes higher. And now we have to reduce 2-month vacancy value. That would be 50,000. So 2,25,000 would be your GAV in this case. Now this would be called your gross annual value. And after that, the provision are exactly same. Municipal taxes paid, 30% interest, no limit. So you can see the beauty of this provision F. If this value comes higher, the standard rent value, if in the comparison this is higher, that would be your GAV directly. But if suppose this value is higher, which has been calculated on the basis of annual rent, then you have the opportunity to reduce the vacancy rent from this value. Okay, tell me, from the point of view of assessee, is this provision beneficial, reducing of vacancy rent or not? Think about it. Is this provision is beneficial from the point of view of tax payment or not? Yes, because now he has the opportunity that he can reduce his vacancy rent also. So definitely that GAV would be less. And if the GAV would be less, then tax liability will reduce. So this is for the benefit of assessee. That if this value, these are government value, like municipal value, fair rent, standard rents are government value. They cannot be changed or reduced by any way. Only you can change or reduce this value, which is ARR. In case of DEG, we can reduce unrealized rent, etc. And in this case also, annual rent give you the opportunity to remove the vacancy rent. But the main thing is to understand unrealized rent and self-occupied rent need to be reduced first before comparison. And vacancy can be reduced after. Don't do the vice versa in the examination. Don't reduce a vacancy over here and unrealized rent out there. No, this is fixed. You can reduce unrealized rent or self-occupied rent before comparison. And vacancy rent can be reduced only after comparison if this value is higher. Now there could be one more problem. Let me tell you what could be the problem. Suppose this lower value, which was 260, suppose this is 275. Standard rent was 275, suppose. And after comparison, for the purpose of comparison, this value also 275. Both are suppose equal. Then which value you will take? If you will take this value, then this would be GAV. But if you will take this value, then you will have the opportunity to reduce vacancy rent. In other cases, it does not affect D, E, G. If they are equal, anything you can take as a GAV because there is no extra benefit of vacancy, etc. Only in this scenario, it will affect because if you will take this, then your fixed value would be this. If you will take this value, then you can get the benefit of vacancy. So department has made provision for the benefit of assessee. If it is equal, again you can take this value and you can reduce your vacancy out of it. So for the purpose of case number F, if the annual rent based value is higher or equal, then we will consider that annual rent value and you can reduce the vacancy rent. That's why F case was different. You can see F case is different just because of this annual rent calculation. So always remember, in case of F, first of all, we have to reduce this. Then we can only reduce vacancy if this value is higher. Understood? Those were the all cases of income from house property. Shraddha is saying not clear, sir, last part. Okay. Full screenshot. Take the full screenshot, student. Okay. Shraddha is saying not clear. Shraddha, what is exactly the problem? Tell me, what is not clear? Okay, this is clear. That when this case would apply, when there is let out and vacancy exist. Understood? Step 1, step 2, nothing new. It is exactly same. Now in case of step 3 only, the lower value what you will consider, that needs to be taken. And now for comparison, remember, always take annual rent of the property. Annual rent means 12-month rental value. Reduce unrealized rent or self-occupied rent if that has been given in the question. If property has been self-occupied or there is some unrealized rent, then you have to reduce that value before comparison. After that, compare this value with the standard rent or lower value. If this value is higher, as in our example, that would be GAV. There could be only 3 cases, and I've explained all 3 cases. This is higher, this is GAV. If this is higher, then from this value, you can reduce your vacancy time period rent. In the example, vacancy was for 2 months. So we reduce 2 months. Suppose vacancy has been given 4 months. So we will reduce 4 months rent, 1 lakh out of this value. That would be my GAV. If they both are equal, then again, the lower value needs to be taken and you can reduce the vacancy time period rent out of that value. I hope it's now clear. And of course, it's a numerical provision. Until we will solve question, until we will practice question, as many as you can revise these provision, recall these provision, give your time on these provision, until you will practice or until we will practice some question. We want to be able to understand it completely. Okay, so just wait. After the break, we will continue with test to knowledge question, illustration, and if time permits, we will also solve one past year question. Shraddha is saying, sir, step number 3, we have to work out as it and then reduce vacancy. Yes, in step number 3, first of all, take 12 months rental value. And if in question, unrealized rent or self-occupied rent is given, you have to reduce it first. Then compare it. Even if after comparison, if this annual rental value is higher, which we have considered after unrealized rent and self-occupied, then only you have been allowed to reduce the vacancy time period rent from that value. And that would be our GAV. Harsh Mishra is saying, so now I realize not so hard as we are thinking. As time going, things seems to be understandable and easy to solve. And let me tell you, Mr. Harsh, when after break we will solve question, you will see house property question will not take more than 2 or 3 minutes. 3 minutes. It's just a GAV calculation, nothing else. And we do not have any GAV problem in case A and B. D, E, and G. In the calculation of D, E, and G, the ARR need to be taken. Everything else, fixed value would be given. Thus, F case is there. So we will practice 1 or 2 questions. F case, you will also feel that it is so easy, nothing to worry about it. In case D, ER concept is not applicable. In case D, E, F, G, in all cases, ER concept is applicable. ER is a universal concept. If there is no FR given, but actual rent is given, then you have to calculate expected rent. Okay. Galt is saying, even though income tax department recommended to consider annual value instead of actual rent, but the department allows to take the deduction, area, and vacancy as much as required. Yes, income tax actually giving you the benefit. Santosh is saying, good, great, sir. Good morning. Have a great morning. Thank you. What will the taxation shall we give for the taxation we will go for in examination? What kind of question is this? Manisha is saying municipal value fair value standard will be divided by 2, and even municipal tax. Yes, if the part of the property has been self-occupied and let out, then you have to bifurcate it. We have that kind of question, of course. Study material. Eighth question I can explain, Navneet, but if time will permit us, because we have to discuss house property first, because these time has been given to all of you for asking study material or TYK problem of salary topic in that session. Gold is asking, sir, what if the annual rent is equal to step number 3? Can we claim vacancy rent, sir? If annual rent is, yes, exactly, we can consider it and we can claim the vacancy rent, because if the my standard rent value and this annual rent based value is equal, we can claim that. On paper, this question looks very easy than salary and tax calculation, because there is not long provision. Only you have to find out only the GAV, that's it. If you are able to calculate the GAV, the question has been solved. Yes, step marking होती है. Sir, I want to take screenshot. Please, can you up the whiteboard? Okay, you can take the screenshot. Okay, not this, sir. Then which one? This you want to take? You can take it. Else, okay, so now this is the break time. So after break, we will come and solve some illustration, test your knowledge questions. There are some theoretical part also left, so it will take not more than 10 minutes to complete that theoretical part from the provision, and then directly we will solve illustration, test your knowledge question, and some MTP or past year questions also. Okay. So what if the annual rent is higher than step number 3? Can we claim vacant as deduction? What does that means? Annual rent is higher than step number 3. I don't understand your question, Mr. Galtianel. So please keep the screen. No, it won't be possible. We are on YouTube. You can scroll back whenever you want. You can take the screenshot by pausing it. There is not a problem. That is easy. And I've also prepared the chart for this also. I'll upload the chart. I forgot to upload the chart of salary also, but I have prepared the chart for income from house property also. Let me see. That has been over here. I will upload that chart also. Okay. So, Mr. Vinu, can we go for a short break? Okay, so welcome back everyone. So I believe you must have your coffee, tea, etc. So we are resuming with our income from house property provision. So Galti is saying, sir, you said in one case we cannot claim vacancy rent as deduction in case F. So that scenario is that, Mr. Galti, in which the lower value would be higher. Like standard rent value, we need to compare it. So if that standard rent value is higher, in the first case we have seen that. In this case, in this example, the first case we have discussed, this one. In this case, you can see that 250 was this value and 260 was the value which has been considered as per standard rent. So this case, we cannot claim the vacancy. If the annual rent based value is higher, then we can always claim the vacancy rent benefit. Okay. Let me see anything else. Mustafa is saying, sir, I like your MCQs very much, sir. Each concept and provision on MCQs I am writing every in my book and also solving it. Very good. Well done. So moving on to the provision now, we will finish the provision and then we'll move on to the question part today. So there would be some problem in today's solution because you won't have time to revise. We are just completing our provision and with that also we have to solve question. So whatever we are going to solve today, you have to practice it at your own after the class. Okay, because I won't be there in the next session. There would be a new faculty and maybe we'll see each other once again very soon. So this is case number E we have discussed. The solution part is exactly same. Case number F is that vacancy case, what we have discussed. And it says, if house property let out for part of the year and vacant, if let out and vacant and self-occupied also, so once let out and vacancy condition fulfill, then automatically case F would be there. So there are some example for practice. You can try that. In this third example, kindly change this date. It should be 1/11/2025. Fine, chalo, let me show you how to solve it. So municipal value, this is F case, municipal value is 90,000 is given in question. Fair rent is 140. So higher would be 140. Standard rent is 120. So 120 standard, that means the lower value would be 120. Now because it's a vacancy case, the provision says there are 3 months vacancy. And actual rent is 12,000 rupees per month. So now we need to take the annual rent. Annual rent value would be 1,44,000. And in this question, you can see there is no unrealized rent information has been given. No self-occupied property information has been given. So we can directly compare this lower with annual rent. So higher would be 1,44,000. How many month vacancy? 3 months. So 3 months vacancy would be 36,000 rupees. And after that, my GAV would be 1,08,000. Clear? It says, suppose in the above example, vacancy period is 1 month in place of 3. Nothing will change. Out of this 144, I will reduce 12,000. So it would be now 1,32,000 rupees. So please try example 3 and example 4 also. Case G we have discussed, part of the year let out and part of the year self-occupied. Same solution pattern as per case number D. Now there is recovery of unrealized rent and arrear of rent provision is there. As in case of arrear of salary, we have gone through in the salary topic. Due to retrospective effect, if you have received salary, then that is called arrear of salary. In the same case, arrear of rent could be there. That if you have let out your property to a tenant for suppose 20,000 rupees per month, and you are asking him to increase the rent, and he's not doing so, so you went to the court, and after some year, in the previous year, court says the rent should not be 20,000, it should be at least 22,000 from last 3 years. So 2,000 rupees per month increment you will receive for last 3 year increment of 2,000 rupees per month you will receive in the current year. So that is arrear of rent. The treatment is very simple. No concept like relief is there. You just need to do one thing. If there is arrear of rent which you are going to receive in the current year, 30% deduction allowed and 70% is directly taxable. In the same case, if there was any unrealized rent like bad debts write-off, we have claimed that unrealized rent from our actual rent received in the year of calculation. And after some year, in the current previous year, suppose there was unrealized rent of 50,000 for previous year 22-23. So the treatment of this unrealized rent must have been done in previous year 22-23. Now this 50,000 has been received. Suppose this is a kind bad debt recovery. So it is now recovered in our previous year 25-26. This 50,000 has been recovered. So again, the provision says after 30% deduction, 70% directly taxable under income from house property. So either there would be arrear of rent or there would be unrealized rent. Both needs to be taxed in the year of recovery, 70% of the value directly. No other deduction, no other concept needs to be applied. Now there are some clarification. Clarification number one is for that fair rent provision. What I have discussed initially in case number D, that if in question fair rent does not given but actual rent is given, then what we need to calculate? Expected rent. So this information is for that point. If in question actual rent is given but fair rent is not given, then fair rent will be calculated on the basis of actual rent and fair rent will be called as expected rent. Point number two, if interest paid outside India, if housing loan is there and interest has been paid outside India and no TDS has been deducted, then that interest deduction cannot be claimed. Note number 3 also for your reading, note 4, note 5 also, and note number 6 also. These are for your reading purpose. Regarding note number 6, there is example also given. So this example is for note number 6. 7th point we have already discussed, that if in case of a builder up to 2 years, there would not be any taxability. After 2 years, those properties would be treated as deemed let out. Provision of house property in India and outside India would remain the same. Interest is allowed on due basis. That's also we have discussed. And the main thing, revise twice. That's my advice to make you wise. And I've also asked you that please remind me for our note number 4, which we have discussed in the first session, that we will discuss that point after the end of the provision. So there was a clarification, I guess. We skipped at that point of time in the last session because now you would be able to understand that clarification very easily. That is point number 4. So you have been seeing that in case of case A and B, the maximum deduction would be 30,000 or 2 lakh rupees. In case A or B, the deduction is 30,000 or it could be increased to 2 lakh rupees maximum. But now note number 4, what we are going to discuss says that suppose it is a case of co-owners. Co-owners means when the property is registered in the name of more than one person. Suppose this is the house, it has been self-occupied and there are 4 brothers are the joint owners. We call them co-owners. A, B, S, C, D, 4 brothers are there. Equal owner of that property. The loan has been taken on this property and the total loan value, the interest value on this loan is suppose 10 lakh rupees in previous year. The total interest is 10 lakh rupees in the previous year. Now we have discussed that this case because the property is self-occupied, so the maximum interest deduction could be 2 lakh rupees. But that 2 lakh is per person, not per house. That is per person. So suppose if a property is having 4 owners. A, B, C, D is not the case. They are the owner. Let me change the name so you would not be confused. Suppose X, Y, Z, and W. They are 4 brothers. And a property is in their joint name. So they would be called co-owners. And the interest value in the previous year of that property, suppose 10 lakh rupees. So if you will think about the normal provision, you cannot claim more than 2 lakh rupees. But in case of co-owners, this 30,000 or 2 lakh rupees deduction would be available for each co-owner separately. So this is not for the purpose of house property. This is as per person. If this house is in the name of only X, a single owner, then deduction would be maximum 30,000 or 2 lakh. So out of this 10 lakh rupees interest, 8 lakh would be wasted. But in our example, now the interest can be claimed 2,50,000 by each owner. So X, Y, Z, W, they can individually claim 250 each. But because the maximum limit is 2, so the maximum they can claim under house property 2 lakh. So technically we can claim 2 lakh, 2 lakh, 2 lakh and 2 lakh. Total 8 lakh rupees benefit we can claim. But if that property is in individual name, then only 2 lakh advantage we can claim. So in case of co-owners, the interest limit of 30,000 or 2 lakh rupees would be considered as per each co-owner, not the property wise, but as per the owner wise. So that was the note number 4, which was written over here. If a house property is owned by 2 or more person, then such person are known as co-owners. The computation will be normal manner, no issue, except that in case of self-occupied or vacant, the interest deduction can be claimed by all of them separately, 30,000, 2 lakh, as the case may be. Okay. Interest is allowed for self-occupied only in the section 115 BAC 1A. Correct. Absolutely correct. Okay. Now moving on to the questions now, because we have to complete it today. So let's see which illustration is relevant. Only those illustration we will solve because there are multiple illustration and we don't have that much time to cover all the illustration. As a homework, you have to solve all illustration and all test your knowledge questions. Page number 3.142. Like this is an illustration for calculation of GAV and it's too simple now. You can calculate GAV easily in all these cases. Remember, when there is no standard rent, then use dash. If there is no municipal value, use dash. But if there's no FR, an actual rent given, then you have to calculate expected rent. This note, this point, please never forget. Okay, this is again very simple. Illustration number 2. A British national is a resident self-occupied property is having, not self-occupied, I guess, let out property. So same provision as the property is in India, same treatment if the property is outside India and you are a resident and ordinary resident. I'm just looking forward for some important question. So that would be beneficial for you. Municipal valuation, simple question. Illustration number 3, again simple. Or I can do one thing, I can solve the question which has been asked in the examination directly. Let me see. I guess that was in the question has been asked. So that is directly going to impact on your confidence that whether we are able to solve a question without even solving, test your knowledge and illustration. So you will understand how easy this chapter is. That was in May 2025 question we will discuss. Question number 3A. So you must have remembered that in case of salary topic, we have discussed May 2025 question, and that question was having 6 marks. And one part is connected to salary provision and the other part was connected to the income from house property provision. And I have told you that we will solve that part when we will cover income from house property provision. So there is a question in front of you. Question number 3A. So this is Sandeep question. You can see Shraddha is saying interest depends, deduction is minimum 30 and up to 2 lakh rupees. Exactly. It depends in only case number A and B. So that was question number 3. And in this question of 6 marks, these informations was for salary calculation. And this question we have discussed under salary topic. Now, the half part is connected to income from house property. So let's see, can we able to understand the solution of the question which has been asked in the examination. Okay, so this is first time actually I am going to solve question for the students without even trying illustration and without even solving any test your knowledge question. So I believe, I am confident that you all are smart and you would be able to solve this question. So Mr. Sandeep is the owner of a house property in Kolkata, which he has constructed during the financial year 16-17. The property consisting of 4 identical units. So this property is having 4 units. Okay, suppose this is a property. So this property is having 4 identical units. Identical unit means equivalent. He occupied 1 unit for his residence. So 1 unit is self-occupied. And 3 units were let out at a rent of 20,000 rupees per month per unit. So these each unit have been let out for 20,000 rupees per month per unit. So 3 cases let out, 1 is self-occupied till now. Municipal valuation is 90,000 for the whole house. So this whole house value is 90,000. So separate 1/4, 1/4, 1/4, 1/4, we can take the municipal value. Tax paid is 20% of municipal value. Okay. Fair rent and standard rent are 7,50,000 and 8,50,000. So 750 is fair rent, 850 is standard rent. So that will also going to be divided into 1/4, 1/4, 1/4. One of the let out unit was vacant for 6 months because 4 units are identical and out of these 3, 1 unit is 6 months vacant. So we can consider any unit as vacant. So this we can consider as suppose 6 months vacant. Interest on loan taken for construction of the house is 2 lakh rupees. So 2 lakh rupees interest we have paid. That is also going to be divided 1/4, 1/4, 1/4. Compute the income of Mr. Sandeep if he is opted out of the default tax regime. So now I have just explained you this question in a short form. And are you able to understand which part we have to solve as per which case? This self-occupied needs to be solved as per case A. What will it impact when you will be able to understand to classify any case according to the situation scenario we have discussed? So now if you know that first part needs to be solved as case number A, so your brain will take you to the solution of case number A directly. And you will only recall the provision, those are connected to case number. So you will not be confused. That's why I make those 7 cases. So the confusion would be removed. Now you know as per case number A, annual value would be nil. either the deduction of interest would be 30,000 or it would be 2 lakh rupees. That's it. Okay, now out of these 3 let out, these 2 let out would be case number D because there is no information for unrealized rent, no self-occupied part of the year. So that 2 cases needs to be solved as per case number D. And this is let out plus vacancy. So case number A. Is there any confusion in understanding of this question? If there is any confusion to understand, as soon as you have divided your question as per the case scenario, now case number D, now you know I don't need to do anything like vacancy over there because case D is straight case, need to take full actual rent received and so on. And case F is vacancy case. So you know now how to calculate GAV. The third point is different. On the basis of annual rent, we just need to calculate the GAV. So we are solving a question of your examination, CA inter-examination, May 2025 students. And if you are able to understand this question without even trying any example or test your knowledge questions, we are directly into the examination hall. And if you are even able to understand the question, that is very interesting because you did not revise the provision. You did not practice any question till now, but still you are able to understand that what kind of provision I need to apply. That's it. That's why I was saying house property is easy. And that's why I always say everything is easy. Okay. Let me see if there is any query. Then we will solve this question. Yes, 9 lakh. I will write it down in detail. 50,000 loss for self-occupied. No confusion in the case. Very good. Able to understand? Very good. Sir, in case A oblique B, we can take maximum 2 property now. Then why we have taken only 1 self-occupied? Saipa, we can take only 2 only in that case when there are 2 self-occupied or 2 vacant. If the property is only 1 self-occupied, all other let out, then let out property cannot be considered as case number A or B. That would be separately. 2 at least needs to be self-occupied or vacant. Then we can consider them in A or B. Suppose if you are having only 1 property, you are the owner of single property and that is let out, then we cannot take that let out property in case number A. In case number A, which property can be considered maximum 2? Vacant or self-occupied. So other 3 properties are not vacant, not self-occupied. They should be full year vacant and self-occupied. So out of other 3 properties, they are not full year self-occupied, not full year vacant. So we cannot consider it. Okay. Chalo, no confusion. Let's solve this question. So I'll write it down, the important information which is related to this question. Let me open this question in my other system so I can read the question from there and then we can solve it. Okay. So Sandeep was the owner of house property. There is a house. So first of all, we are going to solve the self-occupied property. 1/4 is connected to self-occupied. So in case of self-occupied, 1/4, what is going to be my annual value? Students, tell me, what should I take as an annual value? Do that municipal value, fair rent, etc. having any impact on it? The annual value would be nil automatically. Nil, 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 nil. Very good. Well done. Only interest reduction we can claim. And the good news, interest calculation has already been given in the question. That interest is 2 lakh rupees. That was the interest value? Yes. And portion of my self-occupied is 1/4. So how much interest I can claim? 50,000. So this full 50,000 would become my loss of this property. Solved? Any confusion in this solution? You are solving examination question of house property. Can you imagine that? Even without solving a single illustration, we are solving this. So even if you are just able to understand what I am doing as per the provision what we have discussed, that is enough. So is there any confusion in this? That how it 50,000 came? Fifty, 50, 50, 50, 50, no problem, clear. Very good. No confusion. Sure. Now we are having three more properties. This is let out 1/4, 1/4 let out, and this is 1/4 let out plus vacant. Now we will find out these properties, annual value, income, then we will move on to the last case. So this would be my D case. Do not write this D, A or B in the examination. This is for your working note or for your calculation purpose. There is no D, F, A provision in the act. So for the purpose of D case, we have to find out the municipal value. Now the municipal value of the property has been given in the question is 9 lakh rupees. Municipal value was 9 lakh. So 1/4 value we will consider, and that would be 2,25,000. Then the after municipal value, the fair rent has been given in question is 7,50,000. So the 1/4 of it would be 1,87,500, whichever is higher. That is 2,25,000. Need to compare it with the standard rent which has been given in question is 8,50,000. So this 8,50,000 would be 2,12,500. Lower needs to be taken. This lower is 12,12,500. Needs to compare it with actual rent received, which has been given 20,000 rupees per month for each unit. So that would be 2,40,000. So my GAV would be in this case 2,40,000. Till now, any problem in calculation of GAV, students? बताओ कोई प्रॉब्लम है? एग्जाम का क्वेश्चन सॉल्व हो रहा है. ओके, क्लियर, वेरी गुड. Okay, now what is the step after GAV? The step after GAV is municipal taxes paid by owner. यही होता है. And the question says 20% of municipal value. Municipal tax is 20% of municipal value. So we can consider the 20% of municipal value. The municipal value was 2,25,000. So 20% of it would be 45,000. This is my net annual value. 1,95,000. Now what left to do in this case? The 30% deduction. The 30% reduction of 1,95,000 would be 58,500. And the interest part, which would be 1/4 of 2 lakh. So 1,95,000 less 58,500 less 50,000. 86,500 rupees. Any confusion in this till now? Mr. Neeraj is saying, sir, we won't take 1/4 of actual rent. Why? Because the question says the rent was 20,000 per month for each unit. So if it would have been given 20,000 for all three units, and it cannot be 1/4, because for self-occupied property there could not be any rent. If it would have been written 20,000 for all units let out, then we can do it 1/3 of 20,000. But this is not required because 20,000 for each unit per month has been given. So why do we need to do 1/4 of it? Clear? So 86 5,000 is clear to everyone? Mustafa, no clear, sir. What is the problem, Mustafa? What is the problem in this no clear? Tell me what exactly problem you have, Mustafa. No confusion, clear, sir. Okay, got it. Chalo. So exactly this would be the solution for this property also. You just need to write it down this all step again because they are same. You cannot do this examination. You have to write it down each and every point as we have done in this case. So this property value would also be 86,500 rupees. Now we just need to calculate the third case. In the third case, the municipal value would remain the same, 2,25,000. The fair rent would remain the same, 1,87,500. This step would remain same, higher. Standard rent would be exactly same, 2,12,500. This would be lower. The lower value is now 2,12,500 rupees. Now, in case of vacancy, there are 6 months vacancy. Now, this would be annual rent. Annual rent would be again 2,40,000. No unrealized rent is there in the question, and no self-occupied rent has been given in the question. So because there is no unrealized rent, no self-occupied rent, so we can directly compare with this value and this lower value. So higher would be 2,40,000. So now what we will do? What would be the GAV? Can you calculate the GAV and tell me in this point? What is going to be my GAV in this case? Monisha is saying, sir, if the house is divided among the co-owners as units and each units are let out by each of them, should we allocate the value like municipal value, fair, and yes, we have to proportionately allocate them, Manisha. Correct. Let me see how many of you have given the answer. 120 is GAV as per Dhanlakshmi. Shalini is saying 120. 120, 120, 120, 120. Everybody. Sara also saying 120. Mustafa 120. Navneet, Ajay, Neeraj, Deenanath Gupta 120. Deenanath, I guess, giving answer first time. Welcome. Thiyosami 120. Pooja 120. Adil, Achitya. So every one of you has given the correct answer. Now we can reduce vacancy rent of 6 months. That would be 120. So after that, my GAV would remain 1,20,000 rupees. Sorted. Now we just need to follow as per normal provision. The municipal tax would remain same, 20% of municipal value, 45,000. So 120 minus 45,000 is 75,000. Need to reduce 30% of it, 22,500. And interest, of course, 50,000. So if we reduce, the remaining value would be 2,500. I hope it's clear. So now If you'll see, the total house property income is 86,500. This is income, 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 and this is loss. That would be income from house property would be 1,25,500 rupees. This is my answer. And we have solved a question of May 2025 CA inter-examination without even solving one single illustration or test your knowledge question. Did you find it difficult or is there any confusion? Let me know. And I believe also that when we try the questions, when we practice question, then you will understand whether the provisions were difficult or not. So when we were going through the provision of house property, maybe you are feeling confused, complicated, complex situation, permutation, combination. But I believe after solving this question, are you feeling the same? And you still feel that it is difficult. Once you have decided which case is applicable, A, B, C, D, E, F, G, then there is nothing difficult in the house property calculation. There could be only one thing which could be calculated, that would be calculation of current year interest or pre-construction year. If you are able to find out that current year interest and pre-construction period interest, then there is nothing difficult in house property. Mustafa is saying, sir, do you have suggested answer of this question so we know how to write an exam and also what notes we have to give? You can find the suggested answer, MTP, RTP, everything on BOS portal. You can find it out. And if you want, then you can mail it to a BOS. They will send you the link also. You're just saying, sir, you taught us in very detail. That's the actually objective, that you should have the knowledge of each and every provision. All clear? Easy? Miss Madhina Noor is saying, so did you teach PGBP in previous batches? If so, we can. I watched those lectures considering amendment for May 26. I have taken classes for PGBP, I guess, for assessment year 24-25, not for your assessment year. I have taken classes for your assessment year for capital gain is there on portal, income from other sources there. I guess clubbing provision is there, and TDS provision, computation of tax liability. But PGB provision is for, I guess, 1 year old. You can find those classes on portal. In one, can we write in exam? I can show you the solution process which has been given in this question. So you can see how to solve this question. This is income from house property solution over here. Income from house property. So they have combined the properties value, like 3/4 part, they have combined the fair rent, higher, etc. But I would suggest always solve in separate part, because suppose there is any change in the interest calculation, vacancy time period, and if you'll start solving those in combined format, maybe it will save your 1 or 2 minutes. But it could be dangerous if there is any change in the information later. So this is the way institute has been solved it in a combined manner. You can solve it in separate manner. The thing would remain the same. The answer would come the same. Okay. Moving on to the provision. So let me see if there is any more relevant question we can discuss if we have time. Or I can suggest you some important tips regarding the any questions. Okay, let's discuss a question of, this is also an MTP question we are about to discuss, and that is also in your test your knowledge. MTP second. But we can solve it as per test your knowledge question also is there. The number Give me a minute. Question number 4 from your test knowledge we are going to discuss. Navneet is saying as every concept is clear, story time. Yes, of course, there would be a story, and I guess this is a story which you can relate actually. And this is because of my last session, so definitely is a good time for that story. सर आप कौन कौन से चैप्टर कंप्लीट कराएंगे? देखो लास्ट सेशन में मैंने बेसिक रेजिडेंशियल कराया था, हाउस प्रॉपर्टी सैलरी नहीं कराया था। लास्ट में मैंने बेसिक था, रेजिडेंशियल था, कैपिटल गेन था, टीडीएस था, इनकम फ्रॉम अदर सोर्स था, सेट ऑफ भी था शायद, और क्लबिंग भी कराया था, और इनकम टैक्स रिटर्न फाइलिंग एंड कंप्यूटेशन ऑफ टैक्स कराया था। पीजीवीपी वाज नॉट देयर। तो एक्सेप्ट पीजीवीपी, अगर पिछले वाले सेशन को इंक्लूड कर लें और इसको, तो एक्सेप्ट पीजीवीपी अब आपको सारे चैप्टर मिल सकते हैं। हाउस प्रॉपर्टी भी मैंने कराया है, अभी सैलरी भी करा दिया है, बेसिक भी है, और कैपिटल गेन वगैरह पुराने वाले सेशन में भी। सो पीजीवीपी इज नॉट येट, बट इसके अलावा भी कौन से सेशन आएंगे, द शेड्यूल इज गोइंग टू बी अपलोडेड ऑन द पोर्टल, यू कैन चेक इट फ्रॉम देयर। चलो, सो वी वर अबाउट टू डिस्कस अ वेरी interesting question number 4 from test your knowledge, and that is an MTP question also. Same question is in your MTP. Mr. Rohini Ravi, a citizen of USA, is a resident and ordinary resident in India. So that is a question which belongs to properties those are situated outside India. So that's a different kind of question. So when students read this kind of question, they get confused. They are very worried ki how this will I will solve. So I'm just trying to make you feel more confident that nothing to worry. Provisions would remain same whether property is in India or outside India, because Mrs. Rohini is resident and ordinary resident. So all property whether in India or outside India, the treatment would remain the same. She owns a house property at Los Angeles, USA, which is used as her residence. The annual value of the house is $20,000. The value of $1 may be taken 75 rupees. So you might be get confusing. Oh God, this is in dollars. We have to convert it. Let's wait. She took ownership and possession of a flat in Chennai. So she has a house at Los Angeles, and now she has also a house in Chennai. So 2 houses are there. On 1st July 25, she has taken the possession, which is used for self-occupation while she is in India. The flat was used by her for 7 months only during the year ending 31st March 26. The municipal valuation is 384 per annum and the fair rent is 420 per annum. She paid the following Corporation of Chennai, that means municipal taxes, property tax, sewerage tax. She had taken a loan from Standard Chartered Bank in June 23 for purchasing this flat. The interest information has been given. Prior period interest, that means pre-construction period interest, already given in the question. No need to calculate it. And interest during the previous year. These both interest is for our previous year 25-26. You can see the duration is from 1st April till 31st March 26. But has been given in 2 parts. Does not matter. That would be my current year interest. This is my PPI interest. More information. She had a house property in Bangalore also, which she sold in March 22. So she does not have that property in our previous year. In our previous year, she's only having 2 property yet. One is in Chennai, self-occupied. One is in Los Angeles, self-occupied. Nothing is let out. One property was in Bangalore, which has been sold in 2022. So why the information has been given? Due to this. In respect of this house, she received area of rent of 60,000 in March 26. So we need to do the treatment of this area of rent. This has not been charged to tax earlier year. Compute the income chargeable from house property of Mrs. Rohini Ravi for assessment year 25-26 if she is opting out of the default tax regime. Would your answer change if she pays the tax under default tax regime? If she is in default tax regime, the question would be easier. So we are solving this question. And now you can see with the given information, the property has not been let out. Technically, if you will see, One property is outside India. She's a resident and ordinary resident. And one property is in USA. And let me tell you, it is not let out. It is used for self-occupied purpose. One is in Chennai. That is also self-occupied. Only for 7 months. But for the rest of the month, it is vacant. It has not been let out. And because it is not let out, only self-occupied and vacant. So still it would be treated as self-occupied. One property was in Bangalore, which has been sold in 2022. So this property not in this year, in the hands of Mrs. Rohini Ravi. So she is only having two property. Both are self-occupied. And under optional tax regime, annual value of both these properties is going to be treated as nil. Interestingly, the Los Angeles property does not have any loan also. So the answer of this property would remain nil. Yes, Chennai property is having interest payment, of course, on loan. 1/5 of pre-construction period. The pre-construction interest has been given in question 49,200. So 9840 would be the pre-construction period interest, and current year interest in aggregate would be 1,82,100. It is 1,91,940 is the loss from Chennai house property. From this property, she received area of rent of 60,000. So we have discussed the provision. If there's any area of rent recovery, 70% of this is going to be taxed. 30% deduction, 70% is going to be taxed. So this would be my income from house property from this house. So there would be nil value from this house, profit from this house. This could be set off 191,940 less 42,000. So my net loss would be 1,49,940 rupees under optional tax regime. And as the question asked that what would be the treatment if it is a default tax regime? If it is a default tax regime, students, then what will happen? This USA value would remain nil. Again, the Chennai value would remain also nil, because under default tax regime, you cannot claim interest for self-occupied and vacant property. In that case, the only income would be 42,000. So the correct answer under default tax regime would be 42,000 rupees income from house property. So this is the question which has been given in your MPP. So this kind of question can also be asked in the examination. Mustafa is saying PGBP and cap gain I want from you, but Vishal is also great for cost. I study from sir, so I can say sir will handle this also. Exactly, all faculties are wonderful. You just need to understand what faculties is saying. So if you'll go through or according to them, definitely you would be able to understand whatever provision they are going to teach you. They all are very experienced, and of course the BOS is appointing great faculties for you. Mr. Neeraj is saying if answer comes negative, so we can tax it or it will get refunded. No, if the answer is negative, then set of provision would apply. Those set of provision we will discuss in the set of chapter. Harsh is saying question seems to be so difficult, but solution will be simple in exam question. Yes, it always happen. If you have learned the provision well, if you practice well, all numericals are technically easier than solving a theoretical question. In theoretical question, you have to write it down each and every concept. But in numerical, the numerical actually ask you that this is the information, please do the treatment. तो पीजीबीपी आप ही करा दो, आप जो चार्ट्स के थ्रू एक्सप्लेन करते हो बहुत इजीली समझ में आ जाता है. It really helps in revision as well. You can give this feedback to the BOS via mail, etc. This is not in our hand, of course. Yes, it will be set off or carry forward. Just have patience. That would be discussed in the set off chapter. Okay, any more query, students? If there would not be any more query, then we will move on to the story part. And that's a very good story, I guess. You will all connect with it. You will like it. सो यू कैन सेंड मी योर क्वेरीज टिल टाइम स्टोरी स्टार्ट करते हैं, एंड स्टोरी के बाद जो भी क्वेरीज होंगी दैट वी विल टेक. सो स्टोरी ऑफ कोर्स इट वुड बी इन हिंदी. तो क्या बात है, एक बहुत छोटा सा गांव था, और उस गांव में एक बच्ची थी जो रहती थी, और उसे पढ़ने का बहुत शौक था. तो उस गांव में स्कूल बहुत दूर था उसके घर से. सो व्हाट हैपेंस, उसको हर दिन अपने घर का काम करना पड़ता था पहले, एंड देन फिर स्कूल का टाइम होता था तो वो भाग कर जाती थी अपने स्कूल. और फिर ऐसे ही वापस आना होता था तो वो दौड़ कर भाग कर हर वक्त इस तरह से स्कूल आना जाना करती थी. जब थोड़ी बड़ी हुई तो फिर जो छोटा स्कूल था उसकी जगह से बड़े स्कूल में जाना था, वो गांव में और भी दूर था. तो उसको वही करना पड़ता था, कभी साइकिल से कभी भाग कर जाना पड़ता था एंड वापस. तो उस वजह से क्या हुआ, उसकी रनिंग बहुत फास्ट हुई. और जो उसके स्कूल के टीचर्स थे उन्होंने नोटिस करा कि शी रन्स वेरी फास्ट. तो उन्होंने उसे प्रमोट करा कि व्हाई डोंट यू गो इन स्पोर्ट्स, एथलीट्स में जाओ, रनिंग में जाओ, एक्सेट्रा में. सो उसने रनिंग में पार्ट लेना शुरू करा, और वो अपने गांव के विलेज के बॉयज को भी हरा देती थी, बिकॉज शी वॉज दैट इन प्रैक्टिस ऑफ रनिंग एवरी डे. एंड एक टाइम आया जब उसे अपनी कंट्री को रिप्रेजेंट करने का ऑप्शन मिला इन वर्ल्ड चैंपियनशिप ऑफ वुमेन. शी गॉट दैट प्रिविलेज टू रिप्रेजेंट हर कंट्री, और वो फर्स्ट टाइम था कि उसके कंट्री से वुमेन्स रेसिंग चैंपियनशिप में किसी लड़की को पार्टिसिपेट करने का टाइम मिला था. सो व्हाट हैपेंड, शी पार्टिसिपेट इन दैट. बहुत सारा प्रेशर भी था उसके ऊपर अच्छा करने का, बिकॉज शी नोस कि अगर मैं आज जीतती हूँ इस वर्ल्ड चैंपियनशिप में तो मेरे विलेज का नाम होगा, मेरे कंट्री का नाम होगा, एंड शी पार्टिसिपेट इन दैट. अब ये बहुत पुरानी बात है एक्चुअली. तो तब जो रेस होती थी मैराथन में, शी यूज टू टेक पार्ट. जो मैराथन थी वो 10 किलोमीटर 15 किलोमीटर की होती थी, एंड उसका एक अलग तरह का सिनेरियो होता था. स्टेडियम से वो स्टार्ट होती थी, 10 पार्टिसिपेंट होते थे, और सबको स्टेडियम से बाहर निकलने के बाद अलग अलग वे मिलता था. मतलब यू कैन नॉट सी द अदर वन, आपको अलग पाथ मिलेगा. सबके ट्रैक जो होते थे वो सेपरेट होते थे, यू कैन नॉट सी ईच अदर. जब वापस से स्टेडियम में एंटर हो गए तब यू कैन ओनली सी ईच अदर, अदरवाइज दे हैव बीन सेपरेट पाथ. लेंथ सबकी बराबर थी बट दे ऑल हैव 10 किलोमीटर सेपरेट पाथ. नाउ हुआ क्या, रेस स्टार्ट हुई. शी स्टार्ट रनिंग एट हर बेस्ट, भागते भागते भागते. क्योंकि वो स्टेडियम से बाहर आए तो नाउ यू कैन नॉट सी ईच अदर. वो अपने पाथ पे जा रही थी अपने ट्रैक पर, बाकी कहीं और कोई ट्रैक पे जा रहा था. तो जब रनिंग करते करते वापस से ट्रैक पे फिनिश करके स्टेडियम में एंटर होने का टाइम आया, देन उसको स्टेडियम से लाउड स्पीकर पर आवाज सुनाई दी. उन लोगों की कंट्रीज के नाम लिए जा रहे थे जो पार्टिसिपेंट एंटर हो चुके थे. एंड उसको सुनाई दिया कि ऑफ कोर्स उसका नाम नहीं था, उसकी कंट्री का नाम उसमें नहीं था जो एंटर होते जा रहे थे. तो वेन जब वो स्टेडियम में एंटर होने वाली थी तो उसको आसपास कोई नहीं दिखाई दे रहा था. अब इसके दो ही रीजन हो सकते हैं, या तो वो फर्स्ट है, बिल्कुल फर्स्ट, कोई उसके आगे पीछे है ही, या वो सबसे लास्ट है कि उसको कुछ भी नहीं दिख रहा. कि उस सबसे एंड में सब ऑलरेडी एंटर हो चुके हैं और सारी कंट्रीज के नाम अनाउंस हुए, बट उसकी कंट्री का नाम अनाउंस नहीं हुआ. तो शी वॉज वेरी डिप्रेस्ड, उसे लगा कि मैं लास्ट हूं. एंड शी वॉज अबाउट टू स्टॉप हर रेस. उसको लगा मुझे दौड़ना नहीं चाहिए, बिकॉज ये तो बहुत इंसल्ट की बात है, सब लोग मुझसे कितना एक्सपेक्ट कर रहे थे. बट शी डिसाइडेड कि नहीं, आई विल एटलीस्ट कंप्लीट माई रेस. और वो स्टेडियम में अंदर दौड़ते दौड़ते पहुंची, जब एंटर करती है तो उसने दूर देखा कि वहां पर पोडियम पर, स्टेज पर सेरेमनी भी होना शुरू हो गई है मेडल्स देने की. उसको और बहुत बुरा लगा कि मैं बिल्कुल लास्ट हूं और मेरे बिना ही सेरेमनी भी स्टार्ट हो गई. मतलब आई वॉज दैट मच बैड कि मैं अपनी रेस भी कंप्लीट नहीं कर पाई और वहां सेरेमनी प्राइज डिस्ट्रीब्यूशन चालू हो गया. बट स्टिल शी डिसाइडेड कि आई विल कंप्लीट द रेस एट माई बेस्ट. एंड व्हाट हैपेंड, जब वो एंटर करके स्टेडियम में और दौड़ती रही, फिनिश लाइन को कंप्लीट करने वाली थी, तो सब लोगों ने स्टेडियम में उसके लिए क्लैपिंग करी, स्टैंडिंग एविएशन मिला उसे. एंड शी वॉज नॉट एबल टू अंडरस्टैंड कि ये हो क्या रहा है. देन शी केम टू नो कि शी वॉज द फर्स्ट वन. जब उसने बाहर से आवाज सुनी थी बाकी कंट्रीज की, तो वो उस वाली रेस के पार्टिसिपेंट नहीं थे, वो कोई और रेस हो रही थी अंदर जिसके पार्टिसिपेंट्स के कंट्री के नाम लिए जा रहे थे. बट शी वॉज कॉन्फिडेंट कि मैं अपना बेस्ट करूं. जो सेरेमनी उसने देखा वो भी किसी और रेस की, किसी और गेम की सेरेमनी चल रही थी, एंड उसको लगा कि वो शायद उसकी वाली रेस की सेरेमनी. बट स्टिल शी डिड नॉट स्टॉप. शी कंटिन्यू हर रेस एंड शी कंप्लीटेड एट फर्स्ट प्लेस. आप लोग जानते हैं उस, क्या नाम था उस एथलीट का, उस पर्सन का, उस बच्ची का जिसके बारे में हम बात कर रहे हैं? डू यू हैव एनी आइडिया व्हाट वाज द नेम ऑफ दैट पर्सन? Mustafa is saying PT Usha. No, because हमने यही नाम सुना है शायद अपनी कंट्री में. So you must be thinking कि मैं अपनी कंट्री की बात कर रहा हूँ. No, it's not that name. Anyone else? Can you guess who was she? So technically, student, that was not a real story. It is a fictional story. But it is real also for each of us. उस लड़की का नाम नीरज भी हो सकता है. सीए नीरज, सीए नवनीत, सीए मुस्तफिर, सीए बासारावू, सीए थियोसामी, सीए श्रद्धा, कोई भी हो सकता है. ये सब आप लोगों की स्टोरी है. व्हेन यू आर इन दिस सीए प्रोफेशन, तो आपको बाकी लोगों से कोई कंपटीशन नहीं करना कि कौन मुझसे पहले पहुंच रहा है, कौन मुझसे बाद में सीए बनेगा. इट्स योर रेस. यू हैव टू कंप्लीट विद योर बेस्ट एफर्ट. इट डज नॉट मैटर कि आप पहले हो या बाद में हो, डिग्री सबको सेम मिलेगी. जस्ट डोंट लीव इट, बिकॉज कई बार होता है कि हम डिप्रेशन में आकर उस कोर्स को छोड़ देते हैं कि मुझसे नहीं होगा. डोंट डू दिस. किसी की बात पे भरोसा मत करो. जस्ट बी कॉन्फिडेंट फॉर योर सेल्फ. गिव योर बेस्ट एफर्ट. गिव योर बेस्ट शॉट. So you would be a CA. So that girl story is me also. That's your story also. That's all of our story. ये हमारी किसी से कोई competition नहीं है कि उससे पहले मुझे CA बनना है. You should have only one aim, that मुझे CA बनना है. It does not matter कि दूसरा मुझसे पहले बनेगा या बाद में. No. It's my effort, my capacity. मैं अपना बेस्ट करूंगा. पहले बनता हूं या बाद में, that is in destiny. But I have to do best I can do. So that was a story for all of you. If there is any query, please ask me. I will upload the chart of house property as well as salary, so you can download it, and that will help you to understand the provision easily. Neeraj is saying, "वाह सर क्या कहानी थी." Welcome. Basarabuju, sir, we really going to miss you. Don't worry, I'll be back. I will be back after some time. I'll be back. Okay. Yes, this is all your stories. ये स्टोरी मेरी फेवरेट है बिकॉज ये मैं ही था और ये शायद आप सब भी हो. मैं भी जब सीए कर रहा था तो ऐसा ही था कि तुम बहुत कर नहीं पाओगे, तुमसे नहीं हो पाएगा. इट्स वेरी डिफिकल्ट. तुम तो क्लास के ऑर्डिनरी बच्चे थे. आई वॉज वेरी ऑर्डिनरी स्टूडेंट टिल माई 10th, और यू कैन से टिल 12th. आई वॉज वेरी वेरी ऑर्डिनरी स्टूडेंट ऑफ द क्लास. टॉप 25 में भी नहीं आता था. बट वेन आई डिसाइडेड दैट आई हैव टू डू सीए, तो एक वो ऑटोमेटिक सिंसियरिटी आती है. आई प्रॉमिस्ड माई सेल्फ कि आई विल गिव माई 3 or 4 years टू दिस प्रोफेशन वेरी सिंसियरली. And for those 3 or 4 years, I actually study a lot. I actually sacrifice a lot. बहुत 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 sacrifice करा, and I completed my CA in a very short period of time. So that is all about hard working. That's why I'll say hard working matter. Talent is of course a supportive role, but the hard working is matter because मेरे साथ बहुत सारे दोस्त थे मेरे जो बहुत इंटेलिजेंट थे, मुझसे टॉप 5 में आते थे. उन्होंने भी सीए ट्राई करा, नहीं हुआ. बट मेरा हुआ क्योंकि मेरे को ये पता था कि अगर मैं हार्ड वर्क करूंगा, प्लानिंग करूंगा, डिसिप्लिन से करूंगा तो हो जाएगा. और मेरे कई साल बाद भी उनमें से कई बच्चे सीए बन पाए, कुछ ने छोड़ दिया. बट आई वॉज द वन हु कंप्लीटेड वेरी वेरी अर्ली. सो इट्स माई एक्सपीरियंस. दैट्स व्हाई आई ऑलवेज से ना, इंटेलिजेंसी वाला कोई क्राइटेरिया नहीं. इट्स ऑल अबाउट हार्ड वर्क, डिसिप्लिन, प्लानिंग, सेक्रीफाइस. दैट्स ऑल वी नीड टू बिकम अ चार्टर्ड अकाउंटेंट. Thank you, sir. You're welcome. Linga, welcome. Urmila, Madina, welcome. Nagaraja, welcome. Harsh Mishra is saying welcome. और भी chapters लेने हैं, kindly write it on the BOS. Thank you for story. Okay, welcome. Also, looking like a great influence person. If there is voting, I will give you vote. Okay, I will going to participate in election. Last example, if rent from, Kuldeep is saying, in the last example, if rent from Los Angeles earned, then same would not be taxed if not brought to India. No. Because she is a resident and ordinary resident. So it does not matter whether she brought it in India or not. Any income received anywhere, arise anywhere, that is going to be taxed if the person is a resident and ordinary resident. So in that case, we have to calculate the GAV. We have to reduce and calculate GAV as exactly same manner as we do in India, but just need to multiply the amount of dollars into the rupees value and calculate GAV, because no municipal value, no fair rent has been given. So you can calculate expected rent and then find out as per case number D the GAV value, then reduce the municipal taxes paid if that has been given in the question, then 30% deduction. Same provision need to be solved. Shamli saying, sir, आप other chapters भी ले लो. Meet you soon, sir. Yes, we will meet again. Don't worry. Thank you. Consistency matter exactly. Thanks for a wonderful lecture and story. We welcome Saipa. Always saying what a reality check you've given to us. We are very privileged to have a great faculty like you. Thank you so much for a valuable session. I will practice illustration, work hard, and definitely clear exam. Yes, you would be a CA Saipa Virali one day. Welcome, Tiwari Radhesham. Santosh Kumar. Welcome. Meenu is saying, every day you give motivation. Yes, welcome, Meenu. Let me see, is there any query? Thanks for your time, Kuldeep. Welcome. Let's meet again. Of course, we will meet again. Neeraj. Nimma teaching with Thamba. Okay, Kannada language. I understand you want to say thank you. Welcome. One day, start from day one. Exactly. Remember these quotations, what I've shared with you, these are not quotation. These are actually the reality. And please write it down, those quotation in your papers and put it on your wall. You will read them, you will get motivated yourself. And when you feel depressed, go on YouTube, again watch the videos, the story, and you will get motivated automatically. This is for sure. Okay, so I guess there is no more query from anyone. So all the best student, I am there, BOS is there, the all faculties are for you, and we will meet soon again. Till that, work hard and you will be a CA very soon. So, Vinuji, can we close the session?